Welcome to the weekly Brooklyn property market update, of course brought to you by Anglo Volker's Brownstone, Brooklyn, and by my good self, Katriona, and Donald, who is over there in Cobble Hill, whilst I'm here in Prospect Heights. What's it like over there today, Donald?
Yeah, just a beautiful day, like I'm sure it is over there in Prospect Heights, and seems to be like everybody's back in school. I'm not sure if everybody's back at work, either remotely or in place, but the streets are full, sidewalks are full certain times of the day, and a couple of coffee shops around here have lines of 10 to 15 people out the door every morning, which is really interesting kind of data point regarding how many people are actually back living in Brooklyn neighborhoods where we operate.
So after last week's storming numbers, it looks like the luxury market, above 2.25 million, is still showing a healthy number of new to market listings this past week.
Sure is. On the luxury side, saw 27 new listings come to market. It was a little bit of drop over the prior week of 36, but way above where we were at the end of August when we had 7 and 6 respectively back 4 and 3 weeks ago. On the in contract side, a little bit of a drop in activity even further from the 10 2 weeks ago, just 5 deals going into contract. And just to point out, when we talk about this luxury segment here above 2.25, the new to market listings, the majority of them, like 85% of the deals coming to market are between 2.25 and $4 million and not much above there. Sure, there's 1 or 2 deals there. There was a handful last week, townhouses obviously primarily, but the bulk of the activity is between 2.25 and $4 million.
So below 2.25 million market, it looks like we've got almost exactly the same number of new to market listings and in contract as the week before, showing the market to be just as active as it has been.
Yeah, so just under 100 on the new to market side. We had 99 deals enter the marketplace last week, so off 117 2 weeks ago, but again, similar to the luxury side, way above where we were in most of August and July when we were kind of trending in the 30s there, high 30s. On the in contract side, 34 deals last week, almost the exact same number 2 weeks ago at 35, which is about half of what we were seeing in July and August on average. So healthy. We're just coming off the Labor Day weekend here, so things kind of starting to pick up as we head into the fall and a little bit more of an intense transactional season here before the holidays, much tighter than what we see typically in the spring.
So as we are almost at the end of our third quarter of 2021, and as you know, Donald, we're analysing our quarterly data before we publish it. Let's give people a sneak peek of what we think 3Q 2021 is looking like.
Yeah, sure thing. So, you know, if you've been following along here, we've been talking about record number of deals going into contract over the past 12 months almost, but certainly last spring and through the second quarter and in the third quarter. So if you believe and know that the majority of those deals will close in the third quarter that have gone into contract, you're going to have some very, very impressive numbers here. So looking at the last current peak, third quarter 2017, we're just about there. On the townhouse side, 290 deals, third quarter this year, almost the same exact number, third quarter 2017. So in 2017, that equated to $650 million worth of townhouses trading hands. And that number for third quarter this year is actually up to $781 million. So same number, that means the average price has gone up and the total dollar amount has gone up likewise. On the condo side, number of deals in third quarter 2017, 900. Third quarter this year, 692, so just under 700. So quite a few more condos trading hands and a lot of resales there, but also a lot of new development. A lot of projects have been in the pipeline pre-pandemic and are finding buyers throughout this period of time. So the dollar amounts for that on the condo side, third quarter, we were just over $1 billion. We're like $1.1 billion worth of condo product trading in third quarter 17. Third quarter this year, we're just at $1 billion. So almost neck and neck there as far as total volume goes. And it's quite impressive to see that based on where we were obviously 12 months ago but even a little bit before that when there was kind of a lull in the market. So record activity on both the townhouse and condo side.
And of course, for those people who don't remember, the reason why we talk about 2017 is because that was a peak year for the real estate market. A little different now in terms of the circumstances that have led us to where we are versus back in 2017, but it is a good benchmark.
Yep.
So let's end on price adjustments, because price adjustments, by definition, also reflect negotiability. So when we look at the price that something comes on the marketplace at, it might go through a series of adjustments before it goes into contract. Once it's in contract, you don't necessarily know what the last price adjustment was until it actually closes and is marked as sold. So are we seeing any patterns in or when and the depth of those price adjustments on certain asset types?
Yeah, so we track townhouses across the 16 markets that we operate in, while we do obviously do deals in all of Brooklyn and certain parts of Manhattan. This data set we're going to talk about right now is specific to Brooklyn Heights, Cobble Hill, and Carroll Gardens for 1 to 2 family townhouses priced above $4.5 million. And the data set goes back to the third quarter 2020. So that's the data set. Those are the homes. Something I think around 75 houses in that data set. So a fair number of data points to talk to. So what we see is on the deals that are marked as active, their average days on the market are just under 300 at 296, and the average price adjustment we see applied to those active listings is 6.34%. When they come to the in contract part of the marketing undertaking, they've actually, for the data set we have, indicates lesser days on the market, 274, which means some of those homes were priced more appropriately, and expectations of the sellers, both either end users or speculative developers, were a little bit closer to where the buyers were, which is obviously a great way to start. So we're always sensitive to days on market. We want to try to avoid too many days on market for any type of asset we're selling. So again, certain sellers, again, end users, spec developers, certainly high expectations in these 3 particular neighborhoods. So that number as an adjustment, 9.21% off of the original asking price. So when we get to the sold data points, the numbers that go into the public record, we see that, and that's meaning pricing. When we see the pricing come into the public record, we can see the total price adjustment for that listing from its starting point. And that number is 16.76%. The number has been adjusted down that much from its original ask. And that asset has been on the market on average of 412 days, so certainly over a year. So that's the kind of sequence that we see and the adjustments that are made, which again are on averages, and almost every single property sees some type of adjustment.
Great. And as we know, adjustments and negotiability are what it's all about at the end of the day to get a deal done.
Yeah, you have to have a willingness on either side to negotiate. And I think that's reasonable. I think both buyers certainly want to feel like they're getting a deal. And then the seller needs to also kind of bake that into the thought process to where the starting point is, to be able to negotiate, and also to not create a problem where their expectations aren't going to be met, because through the iterative process that we take people through, and based on the numbers I just shared with you, there's a number of days on the market, it is an iterative process because it's a long period of time that we're talking about here, where some of these homes are out there. You have to, put something out there, take feedback, take input, and make adjustments in a timely manner to get to where that buyer pool is. So, it's always great when you have an asset where both parties on buy and sell side are able to negotiate to come to some agreement.
Definitely. So that's it from us. Check back in next week when we'll be able to share more about 3Q 2021, hopefully. I will see you next week, Donald.
Have a great week, Katriona.
Bye.